Hi guys, welcome back to Toto Capital. My name's Liam, and in this video I'm going to show you one, what Wyckoff distribution schematic is, and two, I'm going to run through a live trade example that was shared on my Twitter, on my X account. You can see here I am short USD JPY, deviation and reclaim. Invalidation will cut on the break above deviation, target range lows TP1 and 2 mapped out. So this was called in live time on my Twitter, and it's also been posted in my Telegram group, and you can see the end result here. So this is the receipts that come with this, and you can see this was the outcome of the trade. Okay, so the entry was shared in real time, and this is the outcome. Okay, smashing a 1-3 risk to reward on this setup. Okay, so let's just jump straight in. If you guys aren't connected, make sure to drop by the link below. There is my X account linked directly below this YouTube video. So if you pop over to my channel here, pop over to the most recent video or the video that you're watching now. And here, join the free Telegram and follow me on X. Okay, so that was shared in real time on X. Now let's just break down why the trade was taken, etc., so you can truly understand the Wyckoff distribution schematic. Okay, so initially the Wyckoff distribution is a phase in the market trading where large investors like institutions, hedge funds, etc., gradually sell off their positions to smaller, sort of uninformed investors. Okay, so this is where a lot of money is transferred from larger money and smart investors to the sort of retail and uninformed investors. So this process usually occurs at the end of an uptrend or downtrend and is characterized by a trading range. So we'll identify that, where prices move sideways essentially. Once the selling or buying is complete, the market typically enters either a downtrend or an uptrend, depending on which schematic you're looking at. So key stages include the buying climax, i.e. this is sort of the manipulation. Okay, you have your automatic reaction from this level. Then you have a secondary test, which is essentially just the retest, and ultimately the last point of supply until lower prices. Okay, so that's just the basics on what the Wyckoff distribution is, and it looks like this. Okay, so in terms of simplicity, you don't really need to know all of these smaller terminologies and all of these abbreviations. Okay, the main thing just to note here, the main thing to note is what you really need is ultimately you need to understand what this is here, this test area. Okay, so you've got this test here. This is the distribution phase. This is where the market manipulates above this point of liquidity. Then we deviate back below the range, retest, and then you can look for a continuation to the downside. So that's the basics within the Wyckoff distribution. Now let's jump over to a chart and identify this exact setup that, as I said, was shared on the Twitter here. Okay, and this is using the exact Wyckoff distribution that we're talking about. Okay, so let's just jump straight in. This is USD JPY on the daily time frame. Okay, so what we can see here, let's pop over to the daily just so it's crystal clear. So this is the daily time frame. What you want to first do is head over to your charts, indicators tab at the top of your screen, and type in fractals. Type in fractals. It's this one by Rachel_T. You can use any fractal indicator. However, this is my favorite. If you apply that to your chart, okay, you guys have asked sort of what's the settings on, and everything is on default. Okay, so, take a look here. Haven't changed anything. All I've done is literally just changed the colors. I've made them white. Okay, so now that that's applied to your chart, what we can go ahead and do at this point in time is mark on our most recent fractal high, which is this here, and our most recent fractal low, which is coming in down here. So in terms of price points, okay, most recent fractal high here is 157,200 area. Most recent fractal low, 153,600 area. Okay, remember, these are key points of liquidity. These are key areas within the market. Okay, these are your points of liquidity. These are not sort of specific price points. Okay, What you can see now is ultimately price is above this most recent point of liquidity, this most recent high, i.e., this is the distribution phase. When we look at Wyckoff, a second, this is the distribution where we're testing this point of liquidity. So we've manipulated and came directly above on the daily. Now we need to see how we react off this level. What we want to see is a reclaim of our point of liquidity. Once we see the reclaim, then we can look for a retest and we can look for lower prices. Okay, so let's drop back over here to the daily. Okay, so we've seen that test of the most recent fractal high. Now let's drop down to the lower time frame where we can look for our entry schematic. Okay, so you guys that are trading sort of intraday, this is what you're looking for. Okay, so mark on your high here. This was your daily fractal high. And let's make that in bold for you guys, just so it's nice and clear to see on the charts. Okay, so fractal high, we've ran that liquidity. Mark on the point of interest, the POI. Mark that on here. This is your point of interest here. So notice that this point of interest matches up with the closes of the 4-hour time frame. Okay, so what I mean is basically this is where price was failing to close above here on the 4-hour. Therefore, when we're looking for price to come back down and close below and reclaim this level, we want to see it close back below where we failed to close above recently. Okay, so that's why we mark it on from the candle closes up to the high. Okay, now let's play price on. Let's play price on here. And you can see we've deviated above this level. So this is classified as a deviation, okay? i.e. we've ran the liquidity, which was resting above this high here. Price has ran that liquidity to the upside. Okay, anybody that's looking to sell this market early, their stop losses are going to be sat above this area and they've just been manipulated out of the market. They've just been manipulated, okay? In terms of raw market structure, you can see price made a high in the market, higher low, and then higher high. Okay, so in terms of raw market structure, we've also shifted and broke below. We've got a break of structure below this area here. So we can mark that on as a BOS, break of structure to the downside, mark that on. Okay, so this is a very, very high probability setup because we've actually broke the main structure. Okay, we broke this main structure here. Okay, and you can see we've actually closed below on the 4-hour. Okay, so what we've got here is essentially like trend line liquidity, which we've also broke to the downside. So imagine all of the liquidity that's resting below this trend line, right? Okay, so of course the most important thing is the horizontal areas, but it's still important to note, you know, these trend lines as well, because these can be used as also points of liquidity. Okay, so we've seen the close below on the 4-hour, therefore our entry is on the retest right here. Stop loss, we have clear invalidation above the swing high. This is when we know we're wrong if price breaks back above the swing area here, okay, because then, you know, we're going to be continuing back to the upside. Okay, so we've deviated, we've reclaimed, we've closed back below on the 4-hour. Entries are on the retest. We're triggered in this trade. Okay, in terms of targets, you've got this liquidity area down here, and you've also got these major lows down here. So let's just mark that across for you guys. So liquidity is resting below here, below these key 4-hour swing levels. Okay, these are where buyers' stop losses are going to be situated below here. So ultimately, you know, we're triggered in and we're looking for price to come down, test this area here. Some profit will be taken off the table, and then ultimately you can look for lower prices down at this area here, 155,250. Okay, so let's allow price to play on. And one thing maybe to note is, you know, price isn't always going to just go straight to your take profit. Okay, let's play this on. And you can see ultimately our end targets were smashed on this trade at around a 1 to 3 risk to reward. And at the moment, price is actually running a 1 to 3.8. Okay, so that is an extremely great trade that we have taken here. And this involved the Wyckoff distribution. which is over here. Okay, as I said, you've got your key daily level. We deviated that level, we reclaimed on the 4 hour, then we can look for a retest and then look for continuation to the downside. First targets, you've got these sort of swing lows, and then ultimate targets, you've got these lower fractal lows on the 4 hour. Okay, see how this looks on the hourly. So yeah, absolutely beautiful trade here. And as I said, this was shared on the X on Twitter, so make sure to drop a follow below. Okay, link is in the description of this video. So if you pop over to the description, join the free Telegram, join me on X as well. Okay, so yeah, that's it for this one. I just wanted to break down a very, very nice in textbook setup that was taken live in the markets this week. Okay, so yeah, please let me know your thoughts below. Please like, comment, and subscribe, and I will see you guys in the next video. Take care, guys. Bye bye.